Hello everybody and welcome to the midweek market update from Smack the Markets for the 22nd of April. So of course the big news in the markets this week has been the complete collapse in oil pricing and the realization that there's zero demand for the commodity and that storage levels are at the brim. Now we saw a complete collapse in the pricing for the forward month April contract. That's now sort of passed, but the contagion has now sort of moved on to the sort of current June contract, and that's pricing on that market now is down some over 50% now on the week already. So huge moves. I think the biggest sort of question here is how this is impacting on other markets, and that is now starting to happen. From a retail trading perspective, brokers are starting to restrict new short positions here in oil to try and sort of add a bit of extra layer of protection in there. And with negative pricing in some of these contracts, it's probably a brave contract to consider trading at this moment in time. So if we take a look at the markets that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week here, if we first of all take a look at the Dow, and if we remember from our analysis for the past couple of weeks actually have been looking at weakness here, that the market's back into some significant levels on the weekly chart. So if you recall, we're up against 50% retracement of the move of the coronavirus crash. We're also up against significant levels up here around 24,150 and again at 24,000. And since the market sort of gapped up here and we've now started to fail to actually make any advancement above this sort of technical level, we're seeing sort of weaker pricing in this market again with all US equity markets in fact. So at the moment we're getting a bit of a bullish action in early trade today. The market sort of got through the 23,100 level. It's sort of pushing on to that 23,300 area. For me, I'm looking at more weaker prices here in this market. So I'm looking at this as just some sort of technical pullback. Anything can happen, of course, in these markets, and that's why we've had such a volatile rally in the market when, of course, numbers and earnings are going to be completely dire when they start sort of hitting the street. So at these points here, I'm looking for sort of continued weakness, favoring these markets to the short side. If we do get sort of back below the sort of 23,100 area and certainly below the current sort of low here on the 4-hour time frame, we could see, you know, extended moves down to start to test these key levels around 22 and 21,000. So that's what I'm looking at here on the US equity markets. We do trade them intraday and we do trade the direction. So of course, if we get some real bullish action and the market gets above 23,300, then we would intraday trade these up towards the 24,000 sort of level. But as I say, preference here for swing positions is definitely to the short side. If we come and take a look at gold. Now on Monday we were discussing here the sort of retracement level as to where the market may well come back to. We suggested here this 6160 level as a potential support level that the market may come to test. And you can see that prices come to within a few pips of this and bounced and now sort of started to push to make new highs. So we're certainly seeing some bullish action coming into gold. The challenge here, of course, is the volatility in this market and the sort of structure of these trends across the board. They're not looking particularly easy to be able to identify some fairly sort of tight risk positions. The one concern that I have here with gold and silver is that the two are almost in opposites. If we look at gold, the market looks bullish. If we look at silver, this is almost sort of setting up in the opposite direction. So I'm keeping a closer eye on silver here because silver's already in a short trend, as we can see. And from a higher time frame macro perspective, this looks much more weaker. If we take a look at this on the daily time frame, first of all, you can see that we've got the $15 level here, and another level just underneath, around sort of 1477. There's a sort of these previous highs sort of acting as a bit of support as well. So if the market rolls over here and we get weakness underneath this sort of 1477 area, well, there's not really an awful lot in the way for at least a move down to 14, or maybe even lower as well. Now, if we come to take a look at this on the 4-hour time frame, you can see that the market now has broken through 15. It's pulled back into the area here, so it's got halfway through this trading window. It's pulling back into this sort of area now, and now we're starting to get some geometry with the dynamics here of the trend. So the time frames here, and from a technical perspective, things are still looking particularly weak. So I'm looking at weakness here, and if we see sort of weak signals coming in here, I'll certainly be interested in positions on silver short around this sort of $15 level. Now, if we come and take a look at the EURAUD, which was the forex market that we discussed on Monday, what we were looking for here was level here at 1.7. We're looking for weakness under 1.7 and looking for continued breakout to the short side. This was quite a nice sort of breakout on the sort of 4-hour time frame. Now, the market didn't do that. It sort of bounced off this level. It hasn't sort of broken through the high yet of the sort of recent high, and now we're starting to see a sell-off again. So still liking this sort of position. It's hasn't sort of triggered in yet, or it hasn't sort of invalidated yet. And if we have a look at this on the 4-hour time frame, you can see the sort of level that here on the 4-hour underneath these lows where the market sort of tested many times at 1.7. So again, if we get to break underneath here, looking at trading opportunities to the short side. And very similar to this is Great British Pound against the Aussie. Now, this market is one that we're also actively trading. We tried to get a position on this earlier in the week. That invalidated, and now we're sort of looking at new positions currently short on this one as well. So this is very similar to the euro against the Aussie in the fact that we're looking at weaker prices, looking for a deeper retracement here. And obviously, this is sort of taking advantage of the current strength of the Aussie market. Come to the 4-hour time frame, you can see that the market's already in a trading window at the moment. So we've got sort of the target areas, well-defined target areas to the short side once we sort of get positioned. So there's a few markets there that we're keeping a close eye on in the trading room going into the second half of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.